All right, up now, a look at cryptocurrencies and digital assets with Catherine Murray. Catherine is the host of The Buck Stops Here, and she joins us now. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your crypto and digital asset update. I'm Catherine Murray. Well, the top 10 cryptocurrencies have found some stabilization over the past 2 days or so, but trading volume on Bitfinex does remain below the 30-day moving average. Bitcoin right now lingering around that $20,000 mark. And of course, as you know, the markets are 24/7. So keep your eyes on it. But for right now, we seem to be finding a little bit of stabilization. Now, of course, last week's market driving event was crypto lending platform Celsius freezing clients' assets amid significant market volatility. The fate of approximately 500,000 users and about $8 billion of assets under management, or deposits, I should say, is still actually unknown. Crypto users really wondering if the company will be able to restructure or declare bankruptcy. Celsius is apparently cooperating, though, with various state security officials. Now, of course, you know, the regulatory environment from a federal national perspective is still yet to really develop. So stay tuned for perhaps more news on that front. And again, what the fate will be of the company and what kind of implications that might have for other firms and or investors as they think about, you know, where they place their next dollar or crypto or Bitcoin. Away from that, and on the back of it, perhaps, ECB President Christine Lagarde did comment that crypto staking and lending must be regulated. And of course, all eyes on Fed Chair Jerome Powell as it relates to his next interest rate hike, the Fed tightening cycle, whether they'll be able to combat inflation. Will they cause a recession, or will they be able to orchestrate a soft landing? Well, this week he was testifying before Congress, and he did say that he doesn't see crypto having any macroeconomic implications, and added that better regulatory frameworks for the space is needed. So really no change there, but always important to keep our eyes on what's going on from a regulatory perspective. Also importantly here in China, the state-run newspaper, China Economic Daily, warned investors to be prepared for the risks associated with Bitcoin heading to zero. And the Monetary Authority of Singapore plans to be brutal and unrelenting on any crypto firm violating security laws. Meanwhile, though, we do continue to see increased involvement in the space, in the crypto and digital asset space, with eBay acquiring Known Origin, which is an Ethereum-based NFT marketplace. Interestingly, eBay actually got into the NFT space back in May of 2021 in terms of buying and selling NFTs. In headline news, FTX is buying stock clearing Embed to expand their equity trading platform. Kind of interesting to see a little bit of the crossover between traditional markets, traditional trading markets, and crypto trading in terms of the firms wanting essentially to be able to offer both. We've also, of course, seen many calling for a crypto winter. Despite that, you are seeing, again, more companies move into the space. Coinbase has launched its first derivatives product focused on retail traders. And lastly, we've also heard, and I've heard this from a number of people looking at Bitcoin, that perhaps the best way to invest in it is by doing dollar cost averaging, which is something we obviously know has been a strategy within the equity markets for decades. And this, as it relates to crypto dollar cost averaging, is according to Wolf of All Streets podcast. Nima, I'll leave it there. Back to you.
Thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here. For more analysis and news on the markets, be sure to follow her there.